Let's talk about what we're hearing from the Fed, because I think we all knew the Fed was going to be doing enormous things, but maybe it's just been dawning on us rather slowly how enormous some of those things are and what this might mean for the markets and for the economy beyond that. Has there been anything that surprised you, let's just say, in the last couple of days coming from the Fed?
So I wouldn't say really big surprises, but I think there's a message. And the message is that while the Fed welcomes this slightly better than expected high-frequency sequential data, the Fed is focused on levels and level gaps, the huge level gap in employment as well as activity, as well as actually inflation relative to what it wants to see, conditions of true full employment of the kind that we saw at the beginning of this year. And so the Fed is saying, no matter that we've got this better news, which is welcome, the Fed sees a long haul ahead and is absolutely committed to staying the course to get the economy back to where it was a few months ago.
We were just talking with Steve, and I'm not sure if you heard part of that conversation, but we've seen, obviously, the huge first wave of layoffs, and that's from businesses that shut down because of the coronavirus. Steve was talking about the second iteration, places that might now be feeling the crunch, not because they had shutdowns in their own town or because there were coronavirus cases that were severe in their towns. Maybe you think of it as a place that's not receiving the tourism that they might have been receiving to this point.
Yeah.
Or maybe you think about it in terms of big or small companies that say, hey, as a result of what's happened, we didn't do layoffs initially, but we're going to have to do layoffs now to make up for the loss of revenue that we're going to be dealing with and the loss of just the ability to, or maybe demand for our product that's out there. I think those second, third, fourth iterations, that's what people are concerned about. Do you have any idea how that plays out, or how would you try and model it at this point?
Like, I think the honest answer is that that's the right set of issues to be worrying about, to be thinking about. Incredibly difficult to actually put any very precise modeling, around that. I will add to the points that you raised this concern that, some of the strength that we've seen in spending, but also perhaps associated employment, does seem to be very strongly associated with the boost to low-income households' income from the fiscal programs that were in place, the $600 dollars a week additional UI, the tax rebate checks. And of course, those were hitting at the same time that the PPP funds were being made available to smaller businesses. So fantastic news that those programs seem to have had a big effect. But as we look forward, I think the question is, well, how much of that fiscal support will be maintained going forward, both income support for unemployed and other households, and assistance for small businesses. And if that starts getting tapered off, then the question is, what will the economy look like when it has to stand on its own two legs? So it really matters a lot. First of all, what comes out of these negotiations on potential fiscal force stimulus, but also, how the jobs market sort of operates as some of these supports are at least moderated, if hopefully not just withdrawn in one go.